Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always, Shruti Mishra. These are the top headlines from the startup world. Online stock trading platform Zerodha has clocked a 38.5% growth in revenue in FY23 at 6,875 crore rupees compared with the previous financial year. It also reported a 39% growth in profits, which stood at 2,907 crore rupees in FY23.
The real money gaming industry is staring at a tax bill of over 1 lakh crore rupees. Dream11 faces a tax demand to the tune of 18,000 crore, moves the Bombay High Court against show cause notice for not paying 28% GST on the face value of the bets collected.
Oyo set to report its maiden quarterly profit. Revenue in FY23 rises 14% and losses narrowed to just under 1,300 crore rupees, reduces the number of hotels on the platform by nearly 30%.
Income Tax Department notifies angel tax rules for valuing investments in startups, offering taxpayers a broader range of valuation methods. CBDT provides that the valuation of compulsorily convertible preference shares can also be based on the fair market value of unquoted equity shares.
Khasla, an escrow banking platform, has bagged $5.5 million in pre-Series A funding round by Flipkart Ventures. IIFL Fintech Fund and others also participated. The firm is part of Flipkart Leap Ahead program.
Jeff Bezos' own Blue Origin CEO Bob Smith will step down at the end of the year to be replaced by former Amazon executive Dave Limp. According to Reuters, Limp will take on the CEO role from December 4th, Bezos said in an email.
Those were the headlines that we're tracking for you this evening. But the top story today, India's largest retail broking firm, Zerodha, has reported a stellar set of numbers. The platform has reported a 38.5% growth in revenue for the financial year 2022 to 2023 at 6,875 crore rupees compared with the previous financial year. It also reported a 39% growth in profits, which stood at 2,907 crore rupees in FY23. Now, the online trading platform reported a revenue of 4,964 crore rupees and a profit of 2,094 crore rupees in FY22. Now, this profit number is one of the highest for technology startups and more than double that of its nearest competitor and discount broker Angel One, which had reported a consolidated revenue of 3,021 crore rupees for FY23 and a net profit of 1,192 crore rupees. Now, Zerodha has an active client base of around 64 lakh as of August this year. However, the figures have stagnated over the last 18 months, and there is an apprehension that its top line and profit could be flat in the current financial year. One of its competitors in venture capital-backed Grow had crossed 62 lakh active customers in August, despite facing competition from newer discount broking firms. Co-founder and CEO Nitin Kamath, in a blog post today, wrote that the company will continue to charge onboarding and maintenance charges.
All right, moving on. The real money gaming industry is staring at a tax liability of over 1 lakh crore rupees. The Directorate General of GST Intelligence is reportedly sending tax demands to several companies. Show cause notices have been sent to Dream11 and the company has moved Bombay High Court. The company has alleged that the notices are arbitrary and added that it calls for taxing the entire contest entry amount. Amidst this backdrop, the GST Council will meet in the 7th of October. And to elaborate on these new developments, joining me now is Abhishek Rastogi, founding partner of Rastogi Chambers, and Saurabh Agarwal, partner at EY. Abhishek and Saurabh, welcome to Startup Street. Let me quickly start with you, Abhishek. What do you make of these show cause notices? The real money gaming industry is staring at a tax liability of over 1 lakh crore rupees.
I think to be very fair to the online gaming industry, these show cause notices are arbitrary. And when I say that with full responsibility. One, the valuation with respect to the specific rules for online gaming cannot have a retrospective effect. The rule which is there currently is only for betting and gambling and not specifically for online gaming. If there is an amendment today with respect to online gaming, you cannot say that these online gamings are all in the form of betting and gambling, and hence the valuation must be on the bet value.
Okay.
That is completely arbitrary and discriminatory. So I think that will come into play. The another element with respect to valuation is for the element of that actionable claim. When the money is with respect to participant, it would not fall within that actionable claim purview. So from that perspective, the valuation could be only to the extent of the platform fee of these online gaming companies.
Okay. Sort of quickly coming to you now, GST demand notices seek about 18,000 crore rupees from Dream11. Games 24/7 has a pre-show cause notice of over 20,000 crore rupees. The company hasn't received a formal show cause notice yet, but we learned from sources that at least 5 more notices are there on the way. Gaming companies said this kind of money doesn't exist. The industry does not have this money. Your thoughts on this?
So 2-3 points which I want to highlight over here. First, when you see even after the amendment in the law, when you look at the amended law, which will be effective from October 1, what government is wanting to tax is only the amount which is getting deposited into the wallet, not the bet amount. Vis-a-vis, if you look at all these demands which have come for the past period, they are wanting to tax the entire bet amount.
Yes.
So multiple times, if you are betting from the same wallet money, if you go back and see these show cause notices, they are wanting to tax all these particular bet amounts, which is not even aligned to the law which they are coming up with effect from October 1. So that's point number 1. Point number 2, when we look at the amount of these particular show cause notices, for a gaming industry to survive, it's a question of survival. With such demands, no one has made such GGRs. If no one has made such GGRs, how will they pay back this particular money? That's the second point. Third point is, even if when they are contesting these demands, there's significant amount of pre-deposits which will be required to be made. And everyone is now looking forward to the Supreme Court judgment around it as to what will Supreme Court say. Because if the Supreme Court says that the show cause notice is valid, the biggest issue which will come across is how will many of these gaming companies make the pre-deposit to file the first appeal and then subsequently the second appeal.
Yes, also because, coming to you, Abhishek, if you look at the earnings of these companies, online gaming revenue in 2022 was 13,500 crores and real money gaming revenue was 10,395 crores. So help us understand on what basis are the tax notices being served?
These tax notices will also have to cross the barrier of Article 19(1)(g), which is my right to carry on business or profession. And at some point of time in courts, both Article 14 for discrimination and arbitrariness and vagueness and Article 19(1)(g) will have to come into play, because the tax demand would be arbitrary if it is more than the revenue of the company. So arbitrariness creeps in. Secondly, if this demand is sustained by law for some reason, Article 19(1)(g) will also come into play, because both of these on an aggregate base will completely defeat the purpose, etc., and will have to be tested.
Okay. So, Abhishek, also take us through what are the technicalities in the show cause notices. Dream11's writ challenges DDGI's show cause notices in Bombay High Court. It says notices lack jurisdiction and deserve to be quashed and set aside. So what should and what can gaming companies do now?
I think one and foremost important point is that we should not restrict the arguments only to the show cause notice. We must go to the pre-SCN consulting as well. While I understand that the law has been changed and the word shall is may, there is a discretion with respect to these pre-show cause notice consulting. But Supreme Courts all across have held that when there is a discretion in law, that must be used very cautiously. So in a lot of these cases, the petitioners have not gone into the step prior to the issuance of show cause notice, which is at the DRC 01 stage. And if that test is done, most of these initial at the inception stage will fail, because the proper process and procedure has not been followed. While these may be discretionary powers, it could be at the discretion, these have not been followed. And Supreme Court and separate cases have also held when the root is not correct, then the tree will also not be correct. So I think they will have to go a couple of steps back to see how these proceedings started. Well, what are the lapses there? When these pre-show cause notice consultings have happened, in one of these cases, they've just said that you pay this amount, where pre-show cause notice consulting cannot lead you to a payment, which is against the principles of natural justice. So I think few of these companies will be able to still sail through if they are highlighting on these issues.
All right. Saurabh, your words on this. Also, the 52nd GST Council will discuss issues with respect to setting up of GST appellate tribunals. The council will meet on 7th October, but will this really work, and how will this help gaming companies?
So if you look at, there are two ways of dealing with this issue. One is, as my friend Abhishek talked about, which is the litigation route. The other way is more around the advocacy route. The way the amount of pre-deposits, etc., are, I think, and the way the law has been worded in the past vis-a-vis the way they have come out with the law, it clearly showcased that now the law has been worded in a manner in which they want to levy tax, and that is to the extent only on the
Okay.
deposit value, not even on the betting value. Therefore, what the industry is expecting is a leniency from the government, and they do expect that during this particular council meeting, there should be some clarity, some circular which should come across. At least, even if the demands are coming and even if the litigation is happening, that may be limited to what the change law is saying, which is on the deposits made into the wallet and not on every bet. That's first part. Second part, which I wish to highlight is, even if you look at globally, one of the best practices which are being followed in the gaming industry is to levy tax only on the GGR value. Vis-a-vis in India, where we are going ahead to levy it on the deposit into the wallet. Even if you see the way they have come up with the revised law, they are taxing it by virtue of a rule. They are saying that they are making a change into the rule and saying that they will levy a tax on the amount which are getting deposited into the wallet. Assuming I have not betted anything and I want to withdraw that money, then also I'm required to pay the tax, which is against the principles of GST law itself. Therefore, what our view would be, or what we would suggest, is that to go for advocacy, expect some leniency during the 52nd GST Council is what we look.
All right. Unfortunately, we've completely run out of time, but many thanks, Abhishek and Saurabh, for joining us on Startup Street. And like you said, the word is the show cause notices are arbitrary, and we'll have to watch, 7th of October is the next meet. We'll wait and watch for that one. Thank you so much for joining us today.
Thank you.
On that note, it is time for us to head into a short break. But coming up next, online visa application startup Atlys gets $12 million from Peak 15 and Elevation Capital. How will the firm use the funds to scale its business? We find out from the founder on the other side. Stay tuned.
Welcome back to Startup Street. The Finance Ministry has brought out final rules for angel tax on foreign investments. This with an aim to assess whether foreign investment into startups entails a premium that is liable to any levy under angel tax provisions. The final rules notified seek to provide clarity to investors and give a set of valuation methods to choose from so that the worth of unlisted shares can be assessed accurately. Now, Surbhi Upadhyay is here with more details. Surbhi.
Well, there's some good news for startups today with respect to the implementation of the angel tax provisions. Remember, the scope of angel tax was expanded to include foreign investors in Budget 2023. And while several jurisdictions were exempt, a certain category of investors like sovereign funds, pension funds, they were all exempt from the provisions of angel tax. A lot of the investments that come in, private equity investments that come in startups, they were still within the ambit of this, and therefore it was very important to know how the fair value of shares is going to be determined. Those rules are out today, and there are several newer methodologies that have been added to traditional methods like DCF, the discounted cash flow method, or the book value method. Now, what are these newer methodologies that have been added? Comparable company multiple method, the probability weighted expectation return method, the option pricing method, replacement cost method, and the milestone analysis method. So basically, investment bankers now have a wider arsenal of options to choose from when they want to determine the fair market value of a company's shares, which is looking to go ahead and raise funds. Another good thing is that there's a provision now that if a deal is done, if a startup goes and raises capital at a certain value and it wants to do another deal or basically do another round in a window of 90 days before or after the first, then the same valuation can apply, the same FMV can apply as long as the next fundraise in terms of size, in terms of total consideration value, does not exceed the first one. So that brings some more clarity and certainty. Experts say that the move is in the right direction and it should ease out some of the concerns that the startup community had with respect to higher taxation and the angel tax fears that came into play with respect to raising money from foreign investors.
Right, Surbhi, many thanks for those details. Now, online visa application platform Atlys backed $12 million in a Series A funding round led by Peak 15 partners in Elevation Capital. Existing investors such as Andreessen Horowitz, the musical duo Chainsmokers, South Park Commons, Pinterest founders, and others also participated in this round. Now, founded in 2021, Atlys allows its customers to apply for and get visas on time through its digital platform from anywhere in the world. Joining us now to discuss this further is Mohak Nata, the founder of Atlys, and also with me is my colleague Shruti. Thank you so much for joining us on the show today. You launched in 2021 and you're building a digital platform to make the visa process anxiety-free. So how are you using technology to make this a seamless process? Talk to us about what you have on offer. And is your target audience mostly vacationers or students as well?
Absolutely. So our USP lies in making it simple for travelers to get visas. So on average, an Atlys customer spends less than 3 minutes to apply for any visa. And, we crunch millions of data points to predict exactly when you're going to get your visa. So till date, over 99.2% of visas are delivered exactly on time. Right now, we're focusing on vacationers and leisure travelers.
All right. You've raised $12 million in this fundraise, and you plan to primarily use it towards expanding the platform's product offerings and for travelers and attract customers. So elaborate on these plans. How do you plan to do that? What's in the pipeline?
Absolutely. So there are 25 million international travelers in India right now, but over 10 million passports have been issued just this year. So international travel is about to explode from this country, right? So we will allocate a lot of the funds to continue doubling down on our core offering, as well as launch a lot of new products which are in the pipeline to help the Indian traveler in their complete travel journey.
All right. So you've partnered with governments to make the visa process simpler, right? So take us through these partnerships and any new partnerships on the anvil. How many countries are you currently servicing?
Absolutely. So, over 65% of countries have moved to e-visas. And in 5 years, pretty much every country an Indian will visit will be on an e-visa. And Atlys is at the forefront of this shift. So we're actively working with several governments to sort of help them go from physical visas to digital visas. And our partnerships are rooted in using technology to make it easier for both governments to process visas and customers to get visas. Right now, we support 65 countries. And by the end of the year, we'll be supporting more than 120 countries on our platform.
Okay, 120 countries, that's the target. Let's talk about Atlys's growth. You launched in 2021. What are the kind of business growth numbers you're currently seeing? And what is the road to profitability looking like?
Absolutely. So to give you a sense, we've grown over 8 times in the last 6 months, and we continue to grow even more strongly. For example, right, we've done more visas in the first half of September than we did in all of August, which was actually until now our highest month. While we're not sharing revenue numbers, we are on the path to profitability. And since founding, we have issued over 250,000 visas.
All right. So you're on the path to profitability. How soon will you hit that number? Can you give us a timeline? 1 year? What's the timeline on that front?
We anticipate less than 1 year.
Okay, anticipating less than 1 year to be profitable. You're also, like you mentioned a little bit earlier, addressing other customer pain points as well, right? Like credit for travel, remittance, and travel insurance. So how are you doing this? Take us through these plans, and where will the next leg of growth come from?
Absolutely. So, India is a low trust society when it comes to products, and with visas, it helps us solve a clear pain point for our customers, build trust, and collect a lot of data that we can reuse to help them in other aspects of the journey, right? So, for example, right, empowering people to travel more in the form of launching fintech tools or helping them optimize the international spend, right? So, the goal of Atlys is not just to give people access to, or Indians access to, more countries, but it's also to empower them to travel wherever they want. Okay. And those other products will be coming out in the next 6 to 12 months, and we'll sort of be sharing updates as we launch them.
So you said in the next 6 to 12 months, you'll be launching more products. Are student visas one of those products? Can you give us a sense of the kind of products you plan to launch?
Absolutely. So not really. We're actually just focusing on vacationers and solving their entire sort of travel journey and solving all the pain points. So the kind of products we'll be launching will be more oriented around fintech, giving people credit to travel or helping them spend better when they're abroad,
Okay.
or helping travelers, helping insure travelers when they travel.
All right. Take us through some of the upcoming trends that you're witnessing. What are the most popular destinations that people want to travel to?
Absolutely. So, I think 2 trends have been very interesting, right? So Indians are traveling internationally much more often and in shorter spans. And because of the second one is because of direct flight connectivity to so many destinations, a lot of travelers are actually traveling to previously uncharted destinations, such as we're seeing a surge in terms of the rate at which destinations to Uzbekistan or even Georgia are growing, right? It's splendid. And, this is also reflected in the fact that we're seeing a lot of repeat travelers come on our platform, and go to these, newer destinations, so to say. So these are the top 2 trends that we're seeing.
All right, Mohak. So those are the top trends. But thank you so much for joining us on the show today. We've completely run out of time, but we wish you all the best in this journey of yours.
Thank you.
All right, with that, it's a wrap on this edition of Startup Straight. Goodbye from Arundhati and me, Shruti. More news and updates continue on the other side. Stay tuned.